Hi, this is Kirubakaran Rajendran. Welcome to Trading with Groww channel. In this video, we are going to talk about a specific intraday trading strategy. See, most of the people are working professionals or no, they do not have time to monitor the markets from morning till evening. Due to which, no, they find it really difficult to manage both trading as well as their job. So in this video, we're going to explain a specific trading strategy which doesn't require for you to monitor the charts or monitor the markets from morning till evening. All you have to do is just spend few minutes of your time in the morning, which is going to tell you what would be the breakout levels. So based on that, you can place your buy orders and sell orders and wait for the market to cross that levels. If that is crossed, automatically your order is going to be executed and you don't need to worry about monitoring the markets complete day. So this is going to be a simplified, easy to execute trading strategy. So let me explain with what is the rules behind this trading strategy. Regarding the instrument that you're going to trade with this strategy, it is going to be Bank Nifty futures instrument. You are not going to trade with any other instrument because you have to select strikes. If you have to go for options or if you're going with any other indices, the liquidity might not be as high as Bank Nifty. So it is wise to stick to Bank Nifty. Probably maybe you can apply the same rules with respect to Nifty as well. So these are the specific instruments where you can apply the following trading rules and execute the trading strategy. So I opened Bank Nifty futures chart here. So it's a 5 minutes default chart that you could say in Groww terminal. So with respect to any kind of instruments, once the market opens, as you could see in this 5 minutes chart, there are a lot of ups and downs in the market. Specifically, once the market opens up, during the first 30 minutes, there will be a lot of volatility in the markets where market could move zigzag. Market can initially move up for a bit and then move down for a bit. So there will be a lot of ups and downs during the initial 30 minutes. So what we are going to do is, first let's observe how the first 30 minutes are going to be in the markets, and then only we are going to make the trading decisions, so that we will arrive at a perfect range breakout levels. And once the first 30 minutes range has been formed, then we will apply our trading rules into it. So I have changed the chart time frame from 5 minutes to 30 minutes now. So each candle depicts a 30 minutes time frame. So what we have to observe is find the first 30 minutes high and low range. So this is the 9:15 candle. So I'm placing the first 30 minutes high. This is the first 30 minutes high level, and this is the first 30 minutes low level. So our high and low level, this is our range breakout levels. When market breaks this first candle high, the first candle is nothing but when the market breaks the first 30 minutes high, then we will go long with the first 30 minutes low as the stop loss. In case if the market breaks the first 30 minutes low, like if it crosses and goes below that level, then we will go short in Bank Nifty futures and use that candle's high as the stop loss. So in our level, the breakout level on the upside is 44,135, and on the breakdown level it is 44,040 as per this example which I have taken on 23rd of October. Okay, so in this example, in the next candle itself, after 9, so 9:15 to 9:45 is the first 30 minutes candle. So we are waiting for the market to close the first 30 minutes candle. And once that is done, the range has been formed here. These are the ranges. Now we are waiting for this range to get broken. And in the next candle, after 9:45, market started going down. So 44,040 has broken. Then we'll go short here. So we would have gone short at 44,040, and then by end of the day, if you see, market has closed somewhere here. So we would have closed by end of the day here. So that is our exit level, so which is around 43,400 levels. So almost we shorted at 44,000 levels, and market went down, and it went down a very good downtrend. So we made a very good profits on that day by shorting the markets. So on this one trade, we would have made almost around 600 points of profits because the market started going down once the first 30 minutes level was broken down. So let's take another example here. So again, let's mark the first 30 minutes high and low, since each of this candle is a 30 minutes time frame. Each candle represents a 30 minutes time frame, so I'm just marking the first candles high and low. So in this example, if you see, the range was formed, but throughout the day the market neither moved up nor moved down, so it was in a very tight range. So either market did not move up and gave a buy signal, or move down and gave a buy signal. It was totally a no trade zone. So there will be days like this when the initial range is bigger enough, and if the market remains in a very sideways, there will not be any trades triggered. But let's take the next day example where if you see the high is formed here and the low is formed at this level around 44 390 or 44,400 levels. Now this high, which is 44,562 levels, was broken not immediately because at 9:45, from 9:15 to 9:45, first 30 minutes range was formed. But after that, there was no breakout. So till 11:45, there was no breakout. Only by 11:45, the range was broken and market started moving up. So once that upper no breakout was done, then almost it moved up almost near 400 points on the upside, and it gave you very good returns to risk reward ratio. So this is why I said the initial first 30 minutes we have to wait. If we just go and not started trading with the 5 minutes breakout or 10 minutes breakout, then we would have entered with lots of false breakouts. But here, if you observe, once we waited for 30 minutes, the entire day, the previous day, there was no range. So we did not have any trades. The next day, we waited and it gave a buy signal only after 11:45. So there are days where the signal could be delayed and there are days when there could be no signal also. So it is good for us to wait for the right opportunity and then take the trade so that we don't ended up in buying any false breakouts. So just like the sell trade, for buy trade, that first candle low will be the stop loss, that first candle high will be the buy level. Similarly, if you are going short, that first candle low will be our entry level and the first candle high will be our stop loss for short trades. So people who wanted to use a fixed targets, they can use 1:2 risk reward ratio where they can calculate what is the overall range here. For an example here, 44,400 to 44,560. So almost 150 to 1.160 is your maximum risk in case if stop loss is hit, because opening range high minus opening range low will be your overall range. That is going to be your risk. So which is here 150 points. So in case if you make 300 points of profit, then you can close the trade. So in this trade, it has almost given you up to 400 points of profit. So you would have easily, made 1:2 risk reward ratio and made a good profits. So in case for people who wanted to follow a fixed target, they can use this 1:2 risk reward ratio and then exit the trade. So in case if you have followed this specific strategy for the last 6 years from 2017 till 2023, this is the overall P&L. So the green line that you're seeing is the actual P&L per lot. So if you've traded with Bank Nifty futures, then you would have made approximately around 6.5 lakhs of overall profits trading this strategy from 2017 to 2023 with one lot. So this is the maximum drawdown of the strategy. Drawdown is nothing but what could be the approximate loss that you could face if you're trading with this strategy. So overall, the initial from 2017 till 2019, the initial drawdown was around 40,000, and then by from 2021 to 2022 onwards, the drawdown went up to 80 or 85,000. But eventually, post March 2022, that it has completely recovered from the drawdown. So overall, the drawdown is minimal considering the overall returns of 6.5 lakhs. The drawdown of 85,000 is a decent enough maximum drawdown. So this is the overall yearly returns and monthly returns. As you could see, it shows the overall data month on month. What would be the overall profit that you would have made trading with one lot with this strategy from 2017 to 2023 every single month. So there are months where you make profits, there are months you make loss, so you can't make no profits every single month. But on a yearly basis, if you see, most of the time it has ended up in green. So specifically when there are big movements in the markets like 2019 and 2020, it has given phenomenal profits with very minimal drawdown. So basically, this is going to be a breakout trading system. So whenever there is a big breakout that has happened in the markets, like if market starts going up in the one side direction, or if the market starts going down in the one side direction, this strategy has given a very good returns. And as you could see, most of the times returns to maximum drawdown ratio is much higher when there is a big volatility in the markets. So people who are now trying to trade a trading strategy, expecting to make good profits whenever there is a big volatility in the markets, this strategy will definitely help you out. Even with this strategy, there are days where it can give you false breakout. For an example, so on 25th of October, this is the range high and this is the range low, right? So market initially went up. So during the next candle, as you could see, market initially went up here and started giving you the buy trade since it has gone past the buy trigger levels. So the 44,367 was broken and gave you a buy signal, but then it did not give no further uptrend. It started going down and then gave you a short signal. So what we have what we would have done is the buy trade stop loss would have hit because since we have taken the buy trade first. and then market went down, it gave you a sell trade. You would have taken a short trade. And then if you see the market started going down. So the initial loss would have been covered in the second trade once we taken that, and since the market also started going down. So since because the first trade has hit the stop loss, you don't need to know stop the trades or stop the trading strategy. You can still wait for the second trade to occur when it can happen anytime. So it is always better to take both the trades and wait for the market to go in your direction. So in this example, initially market moved up and gave you a buy trade, and that was ended up as a false breakout, and then you ended up making a loss. But post that, it started going down and it gave you very good profits, and which not only covered the previous days, I mean previous trades loss, but also it gave you an additional profit. So that is why it is essential to wait for the trades to come in your favor and then take the trade. Before you start trading the strategy live, there are few things that you need to keep in mind. See, any breakout trading strategy or trend following strategy, it mainly relies on large trending moves in the market. Historically, with respect to any kind of markets, market doesn't give you a trending move every single day. So you cannot expect profits by trading this strategy every single day. Remember, 80% of the overall profits from breakout trading systems or trend following system will come from less than 20% of the trades. But the problem is we never know when those 20% of the trades is going to come. So it is always wise to take this specific trades every single day. All you have to do is just follow the rules, place the trades every day and wait for the breakout to happen. If it happens and if the market goes in your favor, on a trending, gives you a very big trending move, well and good, you are making a good profits. But you can't expect such kind of trending moves again next week or next day, on a coming days. So whenever there is big trending moves, capitalize it, make good profits. And whenever there are non-trending moves, obviously we are going to lose money, but it is very minimal since our overall risk is this much and overall returns is this much. So the risk to returns ratio is really higher, but winning accuracy could be much lower in this kind of system. So this is what I wanted to convey in this strategy. Hope you found this strategy really helpful. In case if you guys have any questions related to the rules that I have explained, please post in the comment section. I'll address it. Thank you. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.